Hello and welcome to this week's Australian Stock Market Report. Well, this week we're going to be looking at renewable energy stocks, then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Now, in the last week, there's been protests around Australia organised by the Extinction Rebellion with the aim of shedding light on environmental issues in order to get the government to actually take action. Now, regardless of what you think about these protests, I believe as a nation, it really is important that we look after the environment, which includes individuals and organisations. So, what companies are paving the way to support a better environment? Now, whilst there are many companies, unfortunately not all of them are listed, and for those that are listed, many are very small and illiquid, which makes it challenging to invest in them. Now, for example, Renu Energy, who are involved in geothermal power, has risen 115% this year, yet on average, less than $30,000 is traded on any single day on that stock, which makes it really high risk. The other stocks include Mpower, which is up 140%, and Carnegie, that's up 150% just this year since 1 January. Now, Mpower are involved in solar farms, battery storage and microgrids, while Carnegie harnesses ocean energy. But like Renu Energy, both of these stocks are very illiquid, even far more illiquid than Renu Energy, which means they're also high risk. If you do want to support the environment and you like these types of investments, then you may want to invest directly. But in saying that, you really do need to be conservative with your expectations and the returns that you will achieve. Therefore, make sure whatever you invest in does not break the bank. Alternatively, you could actually invest in these innovative companies through exchange-traded funds. Now, whilst I'm not normally a big fan of these investments or exchange-traded funds, in these sort of specialist areas, these can be an ideal way to gain broad exposure with lowering your risk. Now, you still need to do your research, as there are many ETFs ranging from environmentally responsible to ethical to sustainable and more. And so you will need to ensure you're investing in the areas that you really do want to support. Now, in the coming years, I expect environmental companies will gain momentum, and certain companies listing, whilst others will attract capital raisings, takeovers and expansion, which will be exciting to watch from my point of view. But given this, it's my expectations that ETFs around this area that invest in these sort of alternative areas will do well over that longer term. Now, we need to get into the market, so let's talk about what were the best and worst performing sectors last week. Well, healthcare was the standout performer last week, up 5.07%, with Sonic Healthcare, CSL and Cochlear all really doing well last week. Now, utilities was the next best sector, up 3.54%, whilst consumer services and consumer discretionary, well, they were both up over 3% last week. Now, the worst performing sectors, they included information technology down 0.04% for the week, followed by financials and industrials, which were both just in the green last week. The best performers in the S&P ASX top 100 stocks included Crown Resorts. Now, that was up 19.57%, but I wouldn't get too excited about that based on that. It is in a bit of trouble at the moment, so I'd be staying right away from that one with my money. But it was followed by Sonic Healthcare, and that was up 9.67%, and Ampol, that was up 9.42%. The worst performing stocks included TPG Telecom, that was down 7.37%, followed by Appen down 5.45%, and Mineral Resources down 5.25%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, the stock market was a little bit more bullish last week than I thought it might be. I was expecting last week for it to trade lower, but it really sort of defied a little bit of logic. It actually traded up and closed higher on 4 of the 5 trading days of last week. And more importantly, it actually closed up near its high. Now, I'm going to show you that on the weekly chart and why that is actually significant, or a significant sign for our market, because we may be starting to turn the corner. But let's go and have a look at the All Orders Index chart at the moment. Now, on the screen, I've got a monthly chart, and I've put that up there for people to see, because we should never forget that monthly chart. And all too often people are looking at their broker screens or the screens on the internet and looking at daily charts, and you should never ever forget about the longer term picture of what the market is doing, because it'll actually show you that the direction that the market's going to go on, where it's going to find significant support and resistance. And I've just put this is a line that you've seen a few times if you've been watching these recordings for quite a while. You would have seen me draw this or have this on this chart for many times, or for a long period of time, sorry. And it goes right back, if I go right back to that 1982, and it's just showing you how the All Ords keeps tracking around that sort of grey line. It's not a trend line, it's just momentum. It's just showing when the market moves above the grey line or goes below it, it goes up, it comes back to it, goes up and around it all of the time. But I wanted to show you this because obviously that more recent sideways period between September and right through to where it broke out in December last year. It's a nice sideways period that caught it, then the market actually broke up. But I wanted to show you here the 2007 high, the GFC high, which we're seeing, which is on this bar here. If I just get my pointer there, so November there, 6873 points. Now between that one and our current all-time high, which was in February last year, so just over a year ago, 7289. You can see there's only 6% difference between those two. But this is sort of really shows you why buy and hold, you're going to struggle nowadays with a little bit more with buy and hold in terms of if you'd bought somewhere in around here, you've been through a lot of ups and downs and a lot of markets where your portfolio would have not performed very well or fallen quite heavily. Now, in this big V-shape through here, or this V-shaped recovery that people keep talking about, this was one of the shortest, sharpest moves that I've ever seen. It probably is the shortest, sharpest move our market's ever seen, but it's also the shortest, it's the sharpest rise out of it. So it's really strange. In this period here, if you hadn't sold all your stocks through there, you probably have done better than traders who might have been stopped out, because when you get stopped out, you have to make up whatever you stopped out. For example, if you lose 10%, you need to make 11% to break even. If you lose 50%, you're going to make 100% to break even again. So buy and hold probably would have worked a little bit better here. So some of the funds and other people maybe who hadn't sold may have done a bit better, but it's really that kind of risk when you see that sort of big move down. Normally you'll see a big zigzag move down where you'll get a move up and then a third move down. So a second move down, sorry, one moving it back up again, and then you'll see a third move down, but it really didn't do that here. But looking at this right now, we can see this is still the monthly chart. Looking at this, you can see here how the monthly closes through there. There was reasonably way off its high there in December. The monthly close in January was right down near the low. The monthly close right there in February, we tried to push up and it came right back near its low. And currently, it's up near its high on the monthly chart. So this is really a good sign. And this is the highest close on a monthly basis we've seen since the month prior to the all-time high back there in January. So that was the highest close we've seen on our market on a monthly basis, is 7121 points. And so we're getting close to that. So this is suggesting that the market is maybe turning the corner. Now let's go and look at the weekly chart just to see where we're at. Now this is the normal chart that I bring up every single week. And you can see here last week how it opened near its low and closed right on its high. So its high was 7,071 points and the close was 7,063 points. So we're closing right up near that high there. The close was 7,063, so it's only 8 points off its high where our market closed. And if you look back, and if I zoom this up a little bit more, you can see that's the highest close our market's had. Higher here, that was the highest close there is 7,064 points. And as you saw there, 7,063, so almost the highest close since that bar right back in February of this year. But prior to that, it was obviously these two bars here were closing a bit higher. So what I want to see this week for our market to prove it's bullish, because this could be just as I was saying in previous weeks, this could just be a move up, just before it moves down again. So we still need to be careful about that, even though whilst I'm getting excited about this bar, saying it's a lot better if this week we see an inside bar that closes lower, or we see a downward bar that breaks below 6,938 points, which is the low of this bar, then I would suggest it will start to move down into this area and then down into April. So we still need to be careful. It's not time to get super excited on our market at this point in time, but that said, there are a lot of stocks that I'm looking at in the S&P ASX top 100 stocks that are setting themselves up really nicely for some great buys, and this is why Janine and I are both really confident that the second half of 2021 will be good for our market, that will do really well. There'll be some great buys coming up. If you're an astute investor or trader, you'll be able to pick all of those, but now's not really the time to speculate and guess about what's going on. But also now, just as probably a nice little segue there, it's now time to get into our questions that you have for me today. Okay, so the first question that we have today is from Hoosh Gaming, who says, "Hi Dale, I've been trading for about 6 months and had beginner's luck. I was 20% ahead in my portfolio at the start of the year, and 3 months, I think 3 months later, as of the 25th of March, 5% ahead." So obviously it's come back in that sideways move. And he says, "I'm about halfway through your book and it is an eye-opener. I'm working to following what you teach in the book. Now, bright side is that I'm learning from my mistakes." He says, "Could you please look at Mirvac Group? After 3 months of decline, it has had 5 solid weeks and I see an uptrend, thinking of entering mid next week. If the trend continues, appreciate your analysis." I'm a little bit confused about why you say mid next week, because depending on what your buy and sell rules are, I don't know why mid next week is probably a point that you'd pick. It's normally, if this rule triggers, I'll buy. If this rule doesn't trigger, I won't buy. Or on a trend line, we normally say if it's a weekly trend line, we'll buy if it closes above the trend line twice at the end of the week, or 2 consecutive weeks, then we buy. Or if it's a monthly trend line, we'll buy it like I talk about in my book. If it closes on the month above the downtrend line, then the opening of the first day of the next month, you buy. So I'm not sure of your rules there and whether I may not agree with the rules that you have, but let's go and have a look at the chart anyway and see what you're actually seeing. I'm looking at here on a monthly basis. I can't see a trend line on a monthly basis, although this month is looking a little bit more bullish. We had this beautiful rise up through here in December, and it's been falling a little bit since, but not too bad. So these 3 weeks or 4 weeks that you're talking about through here, that's not a trend. It's definitely not a trend. And there's no downtrend line, there's no buy rules here. I don't necessarily agree with your analysis right here, because if I just scroll this out a little bit, a lot of indecision in this bar, indecision here. This is not a good sign. It only closed, here's the close here at $2.42, closed at $2.43. It gapped down and opened, pushed up, couldn't get higher. It went to $2.49. That's at $2.49. Couldn't get higher than the week before, and then it closed about lower. So it's not a good sign yet. So I wouldn't necessarily agree with what you're talking about at this point in time. I'm not saying it's not going to go up, and it may go up this week, and it may break above the high of last week and the last couple of weeks and do really, really well. All I talk about here is probability, and this is where people often get what we talk about, or what Janine and I talk about, wrong. They say, well, it went up. And you go, but you weren't positive on it. But it's all about rules and probabilities. We're not saying that it won't go up or it won't go down. We're just saying, what are the rules you have around that? And you need to have the rules to keep you safe, just like you do in a car. You know, if you pull up, you come into an intersection and the light's green, you know there's high probability that you're going to be able to get through that intersection safely. But if it's red, you're not going to try and go through that, because it's high risk at that point in time, and it's just probability. Now, obviously, we have rules on the road to keep us safe. We have rules around trading that keeps us safe as well, and you really do need to understand that. Right now, what I'm talking about with probability is what I'm seeing on the chart, and the rules that I have around that is not suggesting this would be a buy right now. It may turn into a buy in the next 1 or 2 months or the next few weeks, but right now, I don't necessarily think it's a great stock to buy. But I'm not discounting that it might go up, and you might go, hey, great, I was right, it went up and I bought in and I made some money at it. That would be, again, luck. rather than good strategy or good trading. And that's really what I want to try and separate. If you're reading the book, that means you want to be a better trader or have more positive trades than negative trades. So let's start trading with good rules. That's really all I'm trying to say. But thank you for bringing the question up to me and having a look at that stock, because it really is a good stock to look at, but right now a bit too early. Now the next question we have is from a Brat's Babe who says, hello Dale, can you please look at Santos? My limited experience suggests it's in an uptrend, and I'm thinking of entering into this stock when more support is shown, maybe around the $7.50 mark. Your thoughts appreciated. And they also said, PS, do directors' transactions really matter, and is this something that can play a part in decision to enter or exit a stock? The answer to the second part, I've never looked at directors' interest in my whole life to buy or sell a stock. I just don't. The chart tells you everything that you need to do. So I think a lot of people put a lot more emphasis on that if a director's buying or selling. That happens all the time, and that can cause a little bit of blip on the chart depending on the stock and how liquid it is and who the directors is. But from a point of view of trading the market as a professional, I don't really look at it, and I never looked at it for my personal portfolio as well. But let's go and have a look at the stock for you anyway. Now the stock code is STO if you're not sure of Santos, but looking at this beautiful looking stock, done very, 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 very well since that COVID low back in March there, so looking really good. This month hasn't done as well. You can see here that the monthly bar pushed up, made a new high, but it's come back a little bit lower, and you see it's not really pushing through. Looking for support, I think limited knowledge, I would agree with that. Right now, I wouldn't be looking at this stock until it broke probably at least sort of that sort of high there. I wouldn't be looking at getting into that's about 780. It'll be too high a risk, but because it has been doing so well, you may find it may tip over and come down a little bit, because right now I'm not seeing support on this stock at all. I'm not seeing that it stopped falling yet, even though last week, if we look at that, it did close okay, but it was still well down on the bar there. The close at $7.16, where that one was $7.15, so only 1 cent up from that week. But when I'm looking at this, I would probably expect it might fall away this coming week, and if it doesn't, then it may present some opportunities. But again, I think it's a bit, that 720 mark, I'm not sure whether that's a really good solid resistance point that I would actually, or support level that I would use as an entry rule from that point of view. But thank you for asking the question. Now, the next one we've got is from DJ ZJ, who's a new person posting. We've never had questions from you. Thank you for doing so. He says, hi, mate. For a pure e-commerce play, thoughts on Kogan and my deal. Also, I've been looking at ASX and ASX. I can't even say that. My mouth's not working on a Monday, guys. AX1 and DSK, as well as for bricks and mortar revalue stocks. So I'll go and have a look at Kogan. I'm not going to look at all 4 stocks. I pick one stock to give everybody a bit of a hand there. I tend not to... Which sector companies are in, I don't necessarily think I'm too stressed about, or I'm not too stressed about what sectors companies are in. I just look for stocks that are going up. But looking at your screen, Kogan's going down. It doesn't excite me one bit at all right this point in time. It is moving down. It's a strong move down. There's your high there from October. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9. There's a bucket load of downward moves. That one there is the low of that 1256. It broke below that, so it broke to 1253. Right now, it just looks like it's going down. I know a lot of people bought in through here after the COVID low, because obviously people were buying online. It's taken the stock to great heights. Now we're seeing retail open up all over the place. People are probably more buying at shops as well and going back into the shops and enjoying that, because shopping is a bit of a social type of endeavour that people do. But right now I think there's probably a lot more downside. It may even get down to sort of that $10 mark in that sort of bracket. It could even get right down to about $8 mark. But at this stage, I wouldn't be putting my money near Kogan at this point in time, because right now probability suggests it has further downside. But thanks for posing that question, and keep on doing so. All right, the next question we got is from someone who's got the same name as me, called Dale, who says, hi Dale, can you give me your thoughts on Newcrest Mining? It looks like it's showing signs of a break in a downtrend on the weekly now. I'm also thinking that people might be moving back to gold miners because of the talk about inflation now. Thanks for all the videos that you post. Well, that's our pleasure. Jenny and I love posting videos, and we love having you show your support by clicking the subscribe button, so hopefully you've already done that. Inflation's not going to be a big issue in the next year or two, so I'm not sure of your comment and where you're seeing that. Gold will be, I think gold will still have some movement, but I think most of the movement's already happened in gold, so it's probably not going to gold. Gold tends to be a defensive type of play where if you don't think the market's going to be really good, you'll go into gold, and gold's been running pretty well the last couple of years, but I don't think it's going to run as fast. So I'm not sure where you're getting that from, and inflation's not likely to be an issue in Australia over the next couple of years, because they'll probably, we're talking about the Reserve Bank of Australia not looking at raising interest rates at the moment, and the predictions are that interest rates won't rise in Australia probably till at least the second half of next year. Now, don't quote me on that, because anything can change with the RBA, and obviously if the GDP, we start making a lot more positive gains in GDP and the economy does improve, employment improves, all those sorts of stuff, we will get some inflation, but enough inflation to push gold, I don't think so. But I'm not expecting interest rates really to rise until probably, as I said, the second half of next year. And there's a lot of talk around experts around that it won't be till the second half of next year. Now, every month I do a survey for, I'm not sure whether it's CanStar or Finder or something, I can't remember who it is, on interest rates, where they ask experts like myself to say, well, what do we think interest rates are going to do in other areas of the market? And the research from that, all these experts, is that interest rates won't be something that'll be rising too much, and that's the government will raise interest rates to slow down inflation, and that's really why I'm suggesting that, and there's no talk of that at this point in time. So, but let's go and have a look at the stock anyway. So let's go and look at Newcrest Mining. It's the last stock we're looking at today before we finish up, and right now you can see on a monthly basis it looks quite bearish through here. Obviously the more recent high was July last year. We did have a taking off after the COVID low as everybody jumped into thinking gold, because obviously they're looking at the COVID meltdown there. And at this particular time, we weren't sure how much COVID was going to affect the markets, etc. And as I mentioned a little bit earlier, I was expecting our market to move up and then fall away again, and it didn't do that. It just strongly recovered. So, so what's happening is people made some money out of Newcrest, and then started selling out, and it's not doing as well at this point in time. But even looking at the weekly charts, you can see bearish bar, not a lot of indecision through here. Last week wasn't too bad, but it closed well off its high. So right now I'd be sitting back on Newcrest. It is in a confirmed downtrend. It's looking right now, it may just be doing a little middle move up before it falls away again. But I don't necessarily think there's too much of a reason why it's finding support where it is, but I'm not discounting it could find support where it's sitting at, but right now I'd be staying right out of it until it confirms it's stopped falling. Otherwise you could be catching a falling knife, and a lot of people see a stock will fall away and start to find support and go up for a couple of weeks, and then they'll jump in trying to get at the lowest price they possibly can near that bottom. But what they're doing is they're just buying what's known as a counter trend, where the market moves the opposite direction to its previous move just before it goes away. And what happens in those sorts of places is that the big players and the people buying that stock or selling that stock will just stop selling it. And so by them stop selling it, it takes their liquidity off the market, and there's always going to be buyers for a stock, and especially good stocks like this, and which means the price will drift up a little bit for 1 or 2 weeks. It might go up 5 or 10%, and then what is the sellers who are wanting to get out of it then just come back in and start selling again, and they push it back down. But at least they've picked up an average higher price on their stocks, and that's really where sort of that dollar cost averaging comes into it, because the big players can't sell all of their holdings. If they've got $1 billion invested in a company, they just can't sell that on a day or a week. It can take them months to get out of a stock that they don't like. So they'll gradually keep selling and selling into that market as liquidity is there. And you might hear good reports coming out. You might hear announcements coming out from different things saying, hey, look, gold's going to take off, so get into Newcrest. So you'll see those sorts of things coming out and to entice people to come in to create buyers whilst the sellers are getting out of that marketplace. But right now, Newcrest is not really telling me anything that I'm thinking, yeah, that's exciting to watch. It's just, it's on my watch list as a stock that I might look at down the track. But right now I can't see myself entering that stock for weeks, if not probably a few months. But anyway, thank you for asking the question, and thanks to everyone who did send in an email this week. They're really great, and we're getting a really good diversification of questions, which is really great for us to explore and help people understand the market and what they're doing, and how they might do better at buying and selling, and how they might have better rules around what they're doing. So please keep up the questions. Now remember, if you do want to get a copy of my first book, How to Beat the Managed Funds by 20% for free, all you need to do is click on the link below in that description there and just pay the shipping fee, and we'll send it out to you, and you'll get a copy of my book like some of the people that have answered questions who are reading my book. Now, if you do have questions that you'd like me to answer, you can also stick them below. Now, before you do that, you need to hit the subscribe button, as that is saying to us that you like our show and you appreciate the effort that we put into it. Not just myself and Janine, but the team here that we put into producing high quality content for you. Now, remember that here on this channel, we do these Monday market reports each and every single week on a Monday, and we also do our live stream on Tuesday nights at 7 to 8 p.m. Australian Eastern Time. So hit that subscribe button now. Click the bell on the right of it so you know when we upload and go live. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.